Hi guys, and welcome to another video from Lewisburg Investments. My name is Marcel LeBlanc. I'm a financial planner here with Lewisburg Investments. And today I'd like to talk to you guys about the basics of the tax-free savings account. So understanding the TFSA. So what is the TFSA? So a TFSA is a registered plan introduced in 2009. And think of it as a bucket or a wrapper to hold different investment assets for investment income. But that investment income is never to be taxed to the account holder. Okay? So essentially, your account can grow tax-free and you can use it tax-free. Now, there is no tax deduction, so there's no tax advantage other than the tax-free growth to put money into your TFSA. So unlike the RRSP, it is not taxed, the contributions are not tax deductible. But the interest and the accumulation is tax-free. Not tax deferred, tax-free. So the main catch with the tax-free savings account, similar to the RRSP, is there's a limit to the amount you can contribute or put into your tax-free savings account. And that is determined by the federal government in their budgets. And every year they determine how much more Canadian residents over a certain age can contribute to the tax-free savings account. And that contribution limit or contribution room is cumulative since 2009, assuming that you were the age of majority since then. So let's cover the Tfsa rules. So like I mentioned, you have to be the age of majority in your province in order to open one. You can open more than one tax-free savings account. So you can have one with different institutions for actually different savings goals, with holding different investment savings assets within it. You can name a beneficiary, and you can also name a spouse as a successor holder. And the nice thing about naming your spouse as a successor holder is that if they were to inherit inherit or receive your tax-free savings account, it doesn't impact their tax-free savings account contribution room. So the fact that they absorb yours and now own yours and manage yours, it doesn't impact how much they can keep putting into tax-free savings accounts. So it doesn't impact their contribution room. But only your spouse can be named as a successor holder. Anybody who's not your spouse is named as a beneficiary. They receive the funds non-registered, and then they can put into their own TFSA or RRSP or whatever account they choose. And one of the main misconceptions with the tax-free savings account is that it is a simple savings account, like the name implies. But in reality, you can hold many different things inside your TFSA. You can hold cash and cash equivalents. You can have mutual funds, exchange-traded funds, securities listed on an exchange. You can hold bonds and other fixed income products, and even own certain shares in small businesses, but they have to be approved, right? So there's only certain things that you can put inside your TFSA, but it's still a pretty wide net. And now let's think of how much you can put into your TFSA. So like I mentioned, your contribution room is dictated by the government, and it's been cumulative since 2009, assuming you were the age of majority in your province since 2009. Now we are in 2021 currently. So the TFSA contribution room right now for somebody who was eligible since 2009 is $75,500. Okay, which means that's the maximum anybody really can put in their tax-free savings account. If you've only became the age of majority or became a resident of Canada after 2009, your contribution room would be less than that. Now the tricky part with contribution rooms, and where a lot of people get confused, is when it comes to redemptions. So how much you can contribute and how much you have contributed to date is pretty easy to figure out. But there's a particular rule when it comes to redeeming from a TFSA. Now the rule is that when you redeem money from a tax-free savings account, you will get that contribution room back, but only the following year, along with your new contribution room that you would have gotten regardless. So let's break it down with an example. Let's say I've contributed $50,000 to my tax-free savings account so far. I can still contribute up to $25,500 more because we're in 2021 and I was eligible since 2009. Now I take out $40,000 out of my TFSA for whatever reason. Let's call it a renovation at my house. And then I get a financial windfall. Let's say I inherit some money later on in the year, and I could put my $40,000 back or even more into my TFSA. I actually can't put my $40,000 back that I took out this year because I only have $25,500 of room left. Because I had $75,500, I had already contributed $50,000, the difference is $25,500. So the only thing I can put into my TFSA out of my financial windfall is $25,500 in 2021. Next year, I can put back my $40,000 for my redemption done in 2021 and whatever my new limit would be in 2022. So again, you get your contribution room back in January the following calendar year alongside your new contribution that pretty much everybody who's eligible receives. So as you can see, the tax-free savings account is a pretty flexible plan. You contribute to it, there's no tax deduction, there's no tax receipt. The amounts put in there and redeemed are tracked by Canada Revenue Agency so you don't over-contribute and break the rules. But besides that, the amounts and the interest accumulated within the account are pretty much tax-free. You just have to be careful when it comes to redemptions. When you're close to that limit, if you're doing in and out for whatever reason, you have to be considerate of your overall, how that impacts your contribution room and how much you can fund your TFSA. So if you have any questions about this, please reach out to us. We'd be happy to help you succeed in any way possible. Thanks.